Okay, let's get started. Welcome to today's webcast by Portfolio BI covering order management system best practice for multi-asset class investors. Thank you for joining myself, Craig Fitzpatrick, Managing Director Sales at Portfolio BI, Terry Flanagan, Editor at Global Trading, and our two subject matter experts, Michael Eisenstein, VP Trading Applications, Canyon Partners, Johan Glasman, Managing Director, Head of Product at Portfolio BI. Ahead of diving into today's session, we would like to review a few housekeeping items. Today's event should run approximately 45 minutes. We have allocated some time at the end of the session for Q&A. If you look at the bottom of the screen, you'll see three icons: chat, raised hand, and QA. Please submit questions via QA as you think of them, and we'll get to them at the end of the session. If we do not get to your question, we will follow up with you after the webinar and make sure we have an answer for you. If you have any technical issues during the event, please hit raise hand, and a member of the Portfolio BI team will be in touch with you momentarily. If you miss anything, don't worry. We'll be recording today's session, and we'll make it available after the webinar. Portfolio BI was formed in early 2020 with the merger of Lux and Northpoint from the ACA Compliance Group. We work with more than 150 investment managers and provide leading multi-asset class order management, portfolio management, and enterprise data management solutions. Without further ado, I'm going to hand the panel over to our moderator, Terry Flanagan from Global Trading, and our distinguished panelists. Let's get started.
Thank you, Craig, and thank you to Portfolio BI for the opportunity here. I'm happy to moderate the panel. I'm Terry Flanagan. As Craig said, I am the managing editor of Markets Media Group. If you're not familiar with us, we are a editorial firm. We have a number of platforms. We have marketsmedia.com, Traders Magazine, Fix Global, which is global trading based out of Hong Kong. And we also have a couple European platforms, The Desk, which is fixed income focused, and Best Execution. Some differences across platforms, but at its core, we cover institutional trading and technology and capital markets. So very interested in trading technology and topics such as the one we have today. So I would like to introduce or actually ask our panelists for a little more information on themselves. Michael, first off, that is a really great bow tie. If you could talk just a little bit about that, and also talk about what you do and why you're interested in multi-asset class order management systems.
Certainly. Thank you, Terry, and thank you for Portfolio BI for inviting me to join the panel today. As many nice things I have in my possession that I wear, this was a gift of my wife, and so thank you very much for noticing that. And as far as my interest in multi-asset order management systems, I'm a member of the business technology team at Canyon Partners, and we're a multi-asset investment fund. We manage many different types of assets in fixed income, equity, currency trading. We also have interest rate swaps and other types of macro investments that we make as well. So we run the gamut, and I've been working with Canyon for 13 years of my 20 years being in the industry. Before that, I was working at Bloomberg for 7 years, covering many different products for customers of Bloomberg, working with equities, working with their graphing tools for technical analysis, and also was involved with an equity search project there. But my more recent experience has been with working on trading applications, and I was part of the team that vetted and transitioned Canyon's order management system from another competitor to really filling in a lot of gaps that were missing in what we were using before to what we have now, which is a proprietary system that we built with the assistance of Portfolio BI team. And that is just a little bit about me.
Okay, great. Thank you, Michael. Johan, what do you do as head of product at Portfolio BI, and what is your interest in today's topic?
Great, thanks. Thanks everyone for joining this panel with us. So my interest in multi-asset class OMS is that I'm the head of product for our multi-asset class OMS and portfolio management system, as well as our enterprise data management product. I've been working in this industry for like 25 plus years. I started at Northpoint Solutions, one of the precursors to Portfolio BI, back in 2006. So it's coming up on 15 years that I've been working on this. And our client base has always been very diverse in terms of asset classes traded and strategies kind of handled. And so that's been a great deal of the experience. My role at Portfolio BI as the head of product is to drive product strategy and also to work with onboarding new clients, kicking off engagements, strategy, sometimes some advisory consulting and all of that. And so, multi-asset class trading, processing, and portfolio management are what I live and breathe every day.
Okay, great. Thank you. Okay, let's jump into the content and talk about the multi-asset landscape. According to the Boston Consulting Group, multi-asset funds, together with passive investments, have been the fastest growing segments of the global asset management business over the past decade. Structural changes in the asset management market and the evolution of investment theory have helped contribute to the rising popularity of multi-asset investing. Johan, can you share a bit around what exactly it means to be multi-asset class?
Sure. So, we operate in an industry that uses a lot of acronyms and taglines and buzzwords, and a lot of people mean different things when they say different things. So even the term multi-asset class can mean a lot of different stuff based on the markets that you trade. The way that we tend to see the industry in terms of the kinds of investment management firms that we work with, they tend to fall into three groups. You have traders and portfolio managers that have very broad mandates that enable them to trade virtually all asset types. And in those cases, you'll encounter new asset classes all the time, and and you need a system that will support all of that. There are multi-manager platforms where independent portfolio managers that trade in different strategies will be allocated capital, and even though each one of them might have a particular focus, as a whole, the firm has to support all of the different asset classes that they trade. And then there are investment management firms that are specialists in specific asset classes, equity, fixed income, credit, convert arb, et cetera. And and in those cases, they will have oftentimes a particular focus in one asset class, although that will change over time.
Okay. Michael, as I understand it, Canyon has embraced a centralized order management system with robust two-way integrations, rich functionality to automate and streamline the operations. Can you talk a little bit about this?
Sure. I mean, Canyon business users are looking to get a whole picture of what we're doing in our trading day, where our orders are right now, and what we're trading in within the day. And they've expressed concern about having too many systems to look at once. If they're left to have our trading teams required to keep in their minds what the total picture is, this opens it up the possibility for risk and maybe missing information that could be critical throughout the trading day. So it's always been a focus of Canyon to build a platform where the trading team and the trading operations team can see all that information in one place. Also, what we found is that there's a potential for hidden risks when you're maintaining multiple systems, because all of those systems have certain information that they each need to have, such as the list of securities that are defined, some other information around your list of known brokers, information about the funds themselves that needs to be shared across multiple systems can become daunting if left to try to maintain all that information, even if the systems are trying to keep in sync with each other. So having it all in one place and having a minimal number of platforms to have to maintain has helped us a lot.
Mm-hmm. Okay. Now, a multi-asset class order management system might mean different things to different people, but at its heart, what functionality would you say is crucial, mission critical for a multi-asset OMS? Johan, what are your ideas on this?
Sure. So there are a number of things that order management systems do in general, and the ones that really matter for a multi-asset class OMS are the ones where functionality is a little more complex than they might be in a single asset class OMS or some of the traditional order management systems. And so the functionality that an OMS really has to have, beyond all the other kinds of bells and whistles that sometimes fall into an OMS, but may in this case be a little bit more of a nice to have, are allocations and portfolio compliance. This is something that is true of all OMSs, but is very crucial in the multi-asset class space, that you have not only you have allocation and compliance capability, but that it supports a multi-asset class environment. And I'm sure we'll go into that a little bit in more detail later. You have to have a robust securities master. That's a must to have a securities master that can track all of the different information that you need to manage for reporting, for trading workflow, for compliance, and also to model different kinds of security hierarchies and all the different security master things that happen once you deal with more complex assets. You need to have, to Michael's point earlier, you need to have blotters that show orders, trading information, positions, et cetera, and it has to be firm-wide. So you need to have those screens. You can't just kind of rely on somebody managing stuff in Excel. You need to have specialized workflows for security types that where a specialized workflow is going to speed things up a great deal. So workflows for bank debt, for credit instruments, CDS and CDX, for swaps, for currency products, for repos, all of that. You really need to have specialized workflows for those, both in the trading and the middle office time. You need to have a robust fix integration and API integration with a variety of systems. In the fixed income space, VCon's important. In the equity space, obviously, fixed connectivity is bread and butter of all those systems, but you need to be able to handle that across the multi-asset class spectrum. You need to have, robust settlement and clearing system integration, especially for some complex assets. You need to have integration with multiple data providers, market data, alternative data, things like that. That needs to be a core part of the OMS. And you need now, more than ever, you need to have a real-time or near real-time view of what your positions are intraday across all asset classes, and not just the kind of listed equity space, because that is becoming more and more crucial in the derivative and fixed income space.
Right. Okay. Michael, what would you add or elaborate on what Johan listed regarding functionality, critical functionality for a multi-asset class OMS?
Well, I think I would emphasize by saying you need to have a lot. And I think that that's something that maybe, when you think about it, you take a step back, you don't necessarily appreciate that until you really get into the weeds of things. It was really an eye-opener when we started on the process about 10 years ago to evaluate what we needed and what things have in our system that need to be done well. Robust trade capture is certainly top of that list. And it's very interesting when you dive into like how important just getting the correct cache numbers are. We sort of really started with our process because we found that there was a lot of massaging and hand-holding that we needed to do in our prior order management system around credit default swap trades being transmitted properly within systems, also with some of our mortgage-backed securities and some of our other fixed income products that weren't just your run-of-the-mill corporate bond type structures, that those types of data details needed to be captured properly. And also within robust trade capture, we expanded ourselves from many years ago having paper trading with bank debt to having everything run electronically straight through. And the bank debt process, which has been evolving and hopefully will continue to improve in its timeliness of settlement, is something where there were details in the system that we were using that were not native and required sort of a certain amount of like backflipping in terms of getting the information in and reliably. So that's definitely high up on the list. And then with trade allocations and compliance monitoring, certain allocations are specific to the types of products that you're trading in, as far as what the limitations are for increments of trading increments and minimum lot sizes, and sometimes your company might have their own internal minimum sizes that they want to maintain that are above those of the industry, because they just feel like that's what they can reliably trade on the market. So having tracking of that information is important as far as allocation information, and then also knowing which funds model other funds, because we have separately managed accounts that mirror our flagship funds, and being able to keep all those in line along with the compliance monitoring. Having a flexible security manager, I can't speak I can't speak enough about that. Canyon has evolved to having a team of individuals who are responsible for data governance, which previously was the responsibility of a number of different groups, as sort of like a holistic, everyone did a little bit of the picture, but no one really had full ownership of the whole thing. And we've really benefited from refocusing our efforts on having a team that makes sure that information is maintained, is accurate, is up to date for all parts of the company, not just for one particular area of the business. The management of those compliance rules has also been very helpful for our compliance officers, so that they can catalog and categorize the rules that can match to certain regulatory obligations, and then they can apply those rules to multiple funds and be able to manage that easily. And then lastly, I think these systems are living, breathing things, and they evolve. And there's information coming in all the time, and having a system that can tell you as it's being updated if there's issues with certain information, start of day monitoring of your start of day load, or monitoring of your overnight market data or security master information updates, so that you can get ahead of potential problems down the line and not have to wait for your prime broker or custodian to tell you that you have a break because you missed some kind of coupon schedule update, for example.
Okay, so yeah, we've been talking about the attributes, the benefits of capabilities, I should say, of a multi-asset class OMS. But Johan, what would be the risk or downside to an order management system that is not multi-asset class?
Yeah, so the way that I would look at it is basically that your OMS has a bunch of functionality. And, if you have an OMS that's targeted towards, to pick an asset class out of here, you have an OMS that's focused around municipal bonds, and it does everything. It does trading, it does compliance, does everything. But that system, doesn't handle, total return swaps. Then all of a sudden what you find is that the functionality might as well not be there, because it doesn't cover all of your assets. So you may have an allocation engine that handles, the long short equity space well, but if it doesn't handle what the allocation requirements of all the asset classes, then you've basically lost the benefit of having an allocation engine in your OMS at all, because you can't rely on it consistently. And that's extra true of portfolio compliance. It's very true of security master and all of that. So having that functionality exist and support all of your asset classes, or all of the ones that are supported in the market, is crucial to being able to rely on those pieces of functionality. As more asset types are traded electronically, if you have an OMS that is not geared towards the multi-asset class space, it's likely not going to connect to the various electronic systems, both trading and settlement, that come on the market. And so over time, your OMS will lose the opportunity for straight-through processing, and especially two-way integration with straight-through processing. What I mean by that is you can have, your OMS may be able to receive a trade, but it doesn't have the ability to stage the trade in an execution system. Or you may have the ability to receive some kind of information about settlement, but you don't have the ability to do two-way integration and matching. And as your trade volume grows, you're not going to have timely information to properly capture everything you need. And as more and more asset classes are going into the bucket of strategies where, from a regulatory standpoint, you're expected to properly capture the time of an order and other kinds of information, you're going to, once again, you may have straight through processing in one asset class, but you don't have it across all your asset classes, so you might as well not have it at all. And then, of course, the other major downside of an OMS that doesn't support the asset classes that you trade is it creates a lot of manual work and opportunity for error from the trading assistants, operation teams, accounting, and all of the other folks in the organization who are responsible for making sure that things get processed and things are accurate. And that creates a scalability problem as your organization grows and as the markets may grow in trade volume.
Right. Yeah. The talk about manual processes, I think that's a good segue into the next question. Michael, with regard to compliance and allocations, it is said that too often managers can become overly reliant on Excel. Can you talk a little bit about this, like what the challenges are and how possibly can be resolved?
Yeah, I think it's a great thing to talk about because I think that people need to be aware of what they're exposing themselves to when allocations are predominantly done in Excel. You're putting a lot of reliance on your team members to do things like tracking what the state of information was at the time that you were performing your allocations. And the order management systems that we use, they keep a snapshot of that information, what the state of the security master was, what the state of the portfolio positions were at the time that the calculations were being done. They also provide a stepwise breakdown of what goes into the allocations itself, which might not be something that's easily replicated inside of Excel. And just having to have someone from an audit perspective remember to keep a copy of whatever the Excel file was at the time and know that that's being done reliably is a lot, I think, to put on your team members, that considering that you can have a system take care of those things for you. Also, in many cases, these Excel files will replicate themselves in terms of certain assumptions around what rules are being tracked, because you might be in an organization where you have a separate allocation sheet for a different suite of funds, but they do have some overlapping rules. And that again becomes more challenging in an Excel environment, where how do you keep an eye on the drift that can happen between those two when you might find a problem that you fix with certain asset allocations in one sheet? Do you have a clear recollection to fix it in the other one? So that's just another example where it can become problematic and challenging. Also, with regards to security master information, is your Excel sheet reliably updating itself with information from the markets, information about the terms and conditions that might have changed from the first time that you pulled in that information on the securities you're looking at? And lastly, just being able to keep track of the allocation model rules themselves. Knowing, like, today maybe this allocation rule for your equities is consisting of this many funds, and tomorrow it's another set of funds, and having a way to sort of see all that information together and look at it over time as it might have changed if you need to go back and find out what might have been going on with your assumptions on a particular day is a lot to expect someone to have within a model of like running things all through Excel.
Right. Thank you, Michael. Some order management systems have built-in execution management functionality, while others integrate with dedicated execution management systems. For groups that trade multiple asset classes, they tend to use multiple EMS systems. Now, it sounds like there's some complexity in this OMS/EMS dynamic. Johan, can you elaborate a little bit about this and why it's important in the context of this discussion?
Yeah, happy to. So this is one of those, obviously as you're trading lots of different asset classes, there are execution platforms out there in the world across, a bunch of different venues. And there's not the kind of, in the listed equity space, there is a fairly uniform way to trade most things through one, from one platform. And the choice of platform oftentimes, has to do with broker partnerships and has to do with features around trading. As you go multi-asset class, you're just not going to find one place where you can do all of the electronic trading that you want to do. So what tends to happen is people are using multiple execution systems as well as phone trades and chat trades and stuff like that. So so the kind of the solutions around this fall into a couple different categories. So traditional order management systems that are focused around one strategy will normally have an EMS component built into their platform. So that's kind of your OEMS concept. And that is great when you're in that one strategy, but those systems obviously do not have the capability of covering every single asset class that's out there. So what is going to happen is that your OMS may have some execution capability built in, but then you are really going to have to use external execution systems. Beacon, as an inbound system is common in the fixed income space. And then there are lots and lots of different kinds of execution systems in the fixed income space, in the FX space, CEFs for credit and rate instruments, various kinds of platforms for everything under the sun, Bitcoin and what have you. As these things come to market, there are lots of different execution platforms. So what a multi-asset class OMS needs to do is it needs to establish out-of-the-box connectivity to as many of these platforms as possible, so that when you come on board with a system such as ours, you want to see out-of-the-box capability with most of the execution platforms that you trade, and that involves dealing with all the nuances of you're dealing with two systems and they need to speak to each other, and then that conversation needs to be two-way and fairly sophisticated. And then what's also going to happen is you're going to find new execution venues that you want to trade through execution platforms specifically, and that are new. They come onto the market. No one has had the opportunity to build out-of-the-box connections to them, and so multi-asset class OMS really needs to have a flexible integration engine that can very quickly establish a connection to these products as they come to the market. That means having a robust fix engine, having robust file processing capability if you're dealing with systems that have to operate that way, and having modern APIs, web-based APIs, REST APIs, things like that, to be able to quickly establish a connection as soon as these products come onto the market. Another wrinkle here is that sometimes you will have order management systems that are, when we talk to a firm, they'll come and they'll say, we've acquired a business that was doing, long short equity trading, and they used this particular OMS for that, and that works great for that asset class, but we have, this other business that is using another OMS that doesn't work well in that space, and what do we do? And so the way that we look at that is we then begin to treat the other order management systems as execution platforms that we integrate with, either through their APIs or through standard APIs such as Fix. And being able to do that kind of integration is something that comes up a lot and is pretty important for a multi-asset class OMS to be able to deal with. And that's in the execution context. The other thing that you will have in the bucket of features that are called order management is kind of pre-trade portfolio construction type of systems. What we tend to see in the market is people will have dedicated systems for certain functions in the pre-trade world, usually oriented around a particular strategy, such as arbitrage strategies, converts, merger arb, credit index arb, stuff like that. And they'll have systems that are either homegrown or off the shelf, but really focused around those things. So a multi-asset class OMS needs to not only be able to have integrations on the execution front, but it also needs to have a solid API framework for being able to receive, to be able to integrate with those kind of pre-trade portfolio construction system, meaning receiving orders from them, allocated orders, being able to run compliance on those from a pre-trade standpoint, either through API or through some other workflow, and be able to supply those systems with positions, and not just start of day positions. Oftentimes it has to be real-time positions. So all of this basically boils down to, you need to have a really good API layer that supports all of the typically used frameworks, and it's flexible enough to be able to implement quickly without having to expect some kind of multi-month turnaround. It really has to be, you need to be able to set up these integrations in a matter of weeks, even if you have not connected to those platforms before.
Okay, thank you. Now with regard to reporting, which can be a heavy lift for some firms, there are different systems that can be used to manage reporting, such as order management system, but also portfolio management system, data warehouse. Michael, what type of reporting is the order management system typically and possibly best used for?
Sure. I think, breaking it up into 3 categories: what you need at the start of the day, what you need during the day, and what you need at the end of the day, is a good way of looking at what you're going to ask of your order management system. From the start of day perspective, where you're looking for is firm-wide and fund-specific compliance evaluation, either for your portfolio managers to just get a sense of where your levels are, as far as how close or how far away you are from, if you're over concentration levels that might have happened due to how the market's moved with pricing valuation changes, or just in general to kind of get that sense of what you need as like a keep your eye on at the start of the day when you're managing the portfolio. It's also important for the compliance officers to get a sense from a regulatory perspective if they have any upcoming tasks to do with respect to reporting the fund activity for regulations, like being aware of UK takeover rule changes or other things like that, where concentrations in a particular name require reporting to happen. During the day, certain trading activity that's in the OMS needs to be communicated with other parties in the company that are outside the OMS, other partners that you might be working with. For CLOs and 40 Acts, there's certain details that we need to communicate with other teams that might not be living in our OMS, but want to know what's coming down the pipe as far as their workflow for later in the day, or if there's other sort of things that we need to be monitoring to make sure that we're properly tracking if something happens where we need to make a correction, albeit rarely, or not at all, for changes in trades. Those details need to go out as well, and it starts with the OMS. And then with the end of the day, again, portfolio managers and analysts are interested in seeing sort of the activity as it affected the names that they're covering. What are the state of their orders? What is the state of their portfolio as a whole? The trading desk also needs to kind of do a final recap to look over the trades for the day and make sure everything matches what they had been doing throughout the day as far as bookkeeping is concerned. And the compliance and the trade operations teams are also getting reports of the allocations for those trades, how those broke down, so that they can perform a proper review of the allocations and make sure that they're in line with consistent application to the different situations that you're assigning the trade to the different funds, and make sure that if there's a special circumstance where there might have been funds that are getting a disproportionate amount of allocations, that there's something that makes sense for that, because that was like a special trade for adding to subscriptions or redemptions or what have you.
Great. Thank you for that, Michael. Johan, why is it important to have robust and flexible reporting capabilities in the OMS?
So I'd say that you got that whole list from Michael on all of the things that you need to be able to provide, and it is certainly, when you know the things that a typical client will have, you will have out-of-the-box reports around this. But the fact of the matter is, within this, within the multi-asset class space, especially within new and emerging strategies, even strategies that have been around for a while but are changing in terms of having more regulatory requirements, more electronic requirements, more stuff like that. It's a much more fluid kind of space than some of the more traditional strategies. And what that means is that you're not always going to have every report out of the box, or you're going to have to change reports fairly dramatically, for regulatory requirements, for investor requests, for just lots of different kinds of things. And so having robust and flexible reporting capabilities in an OMS, which didn't used to be a standard expectation that an OMS would specifically be used as a reporting tool, but it's now becoming a requirement just to be able to satisfy all of the kind of operational and reporting requirements that Michael outlined. But the other half of that is that because that's the case, because you need so much information for reporting out to various entities and for audit reporting and just for regulatory stuff and for compliance in general, because you need all of this information, it means that there can be more of an expectation that your OMS has lots and lots of information. Historically, you would have your OMS and it would have some subset of information that you want, but then you would really have to get your reporting from other systems, because there just wouldn't be the expectation that my OMS has my risk data in it, that my OMS has all of my security master information that I need at so many different levels and complicated exposure calculations and stuff like that. And so what that means is that the reporting that you need in order to satisfy the middle office and operational functions can therefore translate to really valuable reporting from portfolio management. So it means that you can generate reporting around idea generation, portfolio construction, hypothetical trading, different kinds of analyses and what-if scenarios and stuff like that. And you are now able to do that in the OMS. And in fact, if you want to use those tools to generate trading ideas and to generate trades, and you have a requirement to integrate pre-trade compliance into it, since that reporting is in the OMS, it becomes much easier to do that. Our product has a pre-trade compliance integration into all of our kind of hypothetical and rebalancing structures. And we're able to do that because we have the pre-trade compliance in it, and because that pre-trade compliance is benefiting from all of the security master information and all of the analytics that are necessary to properly track everything that your order management already needs to track. So it becomes something that it really helps streamline the portfolio management process as well.
Right. Okay. Thank you. I think we have a couple more questions, then we'll go into some closing remarks. Straight-through processing is something that has been talked about for a number of years. It's commonly accepted that having integration with settlement and clearing systems is critical. Michael, can you briefly provide an overview on what Canyon has adopted as clearing and settlement systems by asset class?
Yeah, definitely. For listed instruments as it relates to stocks and bonds, we've integrated with Oasis, which will be transitioning to CTM as part of the industry move by DTCC. They have an aim to be out of Oasis by the end of 2021. What I had mentioned earlier, one of the platforms that kind of started our journey into getting into a multi-asset system was IceLink, which we use for our CDS and CDX trade matching and transmission of trades for settlement there. We've integrated also for total return swaps to a platform called Triana, which we've used for communicating bilateral trades with our swap providers. And then we're also just last year completed a project with integrating with Market ClearPar, which is, the thing that I can say, when you're thinking about these different platforms, why it's important to look at integrating with them on a electronic level is that each of these platforms also maintain their own lists of reference information around your funds, other details about your entitlements with different brokers for bilateral relations with ISDA agreements and things like that. And when you're leaving your teams to have to go into the systems and manually enter the information on an allocation level, you can run the risk of two funds looking almost identical to each other, and the number calculations not being correct when you copy and paste those numbers, when you potentially have fund trades like we do, where there's 10 funds participating in the list of in the allocation breakdown. So all of this is important to consider. And lastly, we've also integrated with Bloomberg for CEF trading, as well as just this summer we completed a project to integrate for VCon. So we're receiving trades from the FIT platform, and we also retrieve from them trades for FXGo for our currency spots and forward trades. So all of that has been really helpful in improving the efficiency of the teams that are working on following these trades through settlement, and ensuring that we're not missing information or incorrectly copying over information from one platform to another, which is a very, very important aspect of any system, and in particular our business users expect it of us.
Sure. Thank you for that, Michael. Now, it said that the goal for the OMS is to be the single source of truth and to communicate with downstream systems. Johan, can you briefly discuss how you approach integration with prime brokers, fund administrators, custodians, accounting systems, risk systems, just other parts of the market ecosystem?
Yeah, I think we take the same approach here as I outlined earlier around trading systems. There's a number of vendors that are used very frequently. So any vendor who wants to be successful in the multi-asset class space will maintain relationships with your typically used fund admins, custodians, commonly used accounting systems, most frequently used risk systems, and market data and stuff like that. So having out-of-the-box integrations with those, especially when they have APIs to work with, is really helpful. And having that out of the box is something that when we talk to a prospect for a product, they're definitely always interested in those. Having said that, there are always new vendors in this marketplace, and again, since it covers a variety of asset classes and strategies, and a lot of these markets are more fluid, you have new products. They come onto the marketplace on a regular basis, and you need to be a little bit nimble as a product or as somebody bringing on a product to be able to have something that has an integration framework that can quickly connect to those vendors in all of the standard typical APIs that are used in terms of outbound communication to prime brokers, fund admins, accounting systems, et cetera. There are a lot that still use files, so you need to have a robust file processing system that handles sending things, amending things, canceling things, error handling, all that stuff. And then you need to, as many of these are converting over to modern APIs, you need to have modern API support in the system, both in terms of somebody integrating with our system and the ability of the system to integrate with others. It's easy to send, a ticker, a quantity, and a price to somebody for an equity. That tends not to be complicated in an API scenario. But how do you map multi-leg securities, right? What if they handle swaps differently than your OMS does, and your accounting system and your fund admin? They all handle that differently. All that needs to be handled, and so having robust API support that can adjust for those things is absolutely crucial, and that's kind of how we approach being able to bring on new platforms that we work with.
Okay, if we could move on to closing remarks. Johan, if I could stick with you, what would you say are, either the key takeaways of this discussion that we've had that's been quite comprehensive, and or things to look out for going forward with regard to multi-asset class order management systems?
Yeah, I mean, I think I would definitely reiterate, that you want your platform to have the right kind of technology, and you also want to have the firms that you're working with, whoever is implementing the platform, whether that's the firm that is the product company, or whether it's another integration firm, that they have strong subject matter expertise and knowledge about how these asset classes work. You want to one of the things that is really crucial now in the audit space, just in the regulatory area, is the concept of knowledge date, of being able to ensure that all of your systems, especially your OMS, they don't delete things, they audit things, right? They archive things so that you can always pull back, well, what did I think my positions were at the end of last month, a week ago, right? And therefore, when I did a trade and I ran compliance, what did I know from a time standpoint? That's a crucial function that used to be something that you really only needed in certain systems and data warehouses, but now is becoming more and more important for a lot of systems. And the one thing that I tend to look out for on an OMS is to really get value out of platforms when you need systems to, so many things now have to be well integrated. Your security master, your compliance, your trading, your position keeping, your real-time views and things. All these things cannot be isolated. They now kind of have to exist in one ecosystem and in one system, ideally. Because that is available, one thing that I tend to look for is how do I see adoption of the product within the firm? How useful is the product to not just the people who are responsible for capturing and maintaining trading information, but portfolio managers, risk managers, investor relations, all sorts of groups within the firm may be able to benefit from some of the things that an OMS can provide. And that adoption with the firm has the side benefit of also just providing more eyes on your system and on your data. And it's kind of, you have that kind of viral effect, essentially, that the more people are using it, the more people are putting interesting things into it and tracking and suggesting features, and you just get better bang for the buck across the board.
Okay. Michael, closing remarks?
Yeah, I think everything that Johan said is right on point. And I would just also add that having one of those people, one of those groups that are involved with that be your data management group, having some team whose focus is on ensuring that the data is accurate and up to date and that is being modeled correctly and has an idea of how that data is being used across the firm is really important. When I was first starting with Canyon, it was something that we had to evolve and build, and a lot of times information was kind of being found afterwards in reports as needing to be updated, or when we were trying to expand into other areas of information reporting, we just ended up having it in all sorts of different places and not just in one central repository as a security master that we could reliably know is getting updates and is getting reviewed and is valid for what we need to do our daily work. So that I think would be a critical takeaway.
Okay, great. Johan and Michael, I want to thank you very much for a really informative discussion here. Thank you for sharing your insights on this topic. And I think I will now turn it back over to Craig Fitzpatrick.
Yes, I'd like to thank everyone for joining the webinar today. And if anyone has any questions, feel free to reach out to your contact at Portfolio BI. Thank you.
Thank you.
Thank you.
Thanks.